Welcome to the de minimis safe harbor election mini lesson, and thanks for watching. We always talk about in teaching tax flow that one of our laws are that tax agencies are our involuntary business partner. And because of that, this election was born. The IRS really didn't want the burden of combing through if certain expenses should be deducted immediately as repairs and maintenance or capitalized and depreciated and then have to be kept on your tax return and in your balance sheet or depreciation schedules indefinitely. So I'm excited to bring you the content on this mini lesson. So I gave you a little bit of a brief subject introduction already. We're going to talk about when that election could be made per IRS regulation section 1.263A1F. I won't say that anymore, that long drawn out the verbiage. But all we know is we're going to get a little technical in this mini lesson like we do in many. We're going to talk about what an applicable financial statement is. That's a term that the IRS uses and to define kind of the size of the business and when you could take this safe harbor election. We're going to give you a sample election so you have that takeaway for tax preparation if you're trying to prepare your own return or if you're using another tax professional. Of course, we're going to look at our TTF AIM activity investment matrix profile to see who would benefit from this type of election. Finally, we're going to have some calls to action. So we talked about, again, I already talked about this election, and what it's doing is allowing you to take an immediate deduction for things that are potentially should have been capitalized because there's a longer life. So let's dive into this de minimis safe harbor election. So under final tangible regulations, what the IRS is saying is that I'm going to key right here that if you have an applicable financial statement, so if you're a business owner, rental property owner, we're going to talk about applicable financial statement or AFS. If you have applicable financial statement, you may use a safe harbor to deduct amounts paid for tangible property. That could be computers, that could be equipment, that could be a copier, could be furniture. So tangible personal property that usually should be depreciated. The IRS is saying, hey, take the deduction now if you have an applicable financial statement up to $5,000 per invoice or item. That's a significant amount for people with applicable financial statements. The vast majority of taxpayers do not have applicable financial statements. We're going to talk about that, like I said, coming up. So if you don't have applicable financial statements, you could still use a safe harbor and deduct any amounts $2,500 up to $2,500. That was only $500 before 2016 per invoice or item. So if you buy two things like a washer and a dryer, as long as each of them are under $2,500, you can take an immediate deduction under this de minimis safe harbor election. Let's talk about applicable financial statements. What an AFS is it's when a business has a financial statement that is required by the SEC. Remember, I mentioned most taxpayers do not have an applicable financial statement. But if you have a financial statement that is required by the SEC, so you're a publicly traded company, something like that, or any other type of certified audit financial statements accompanied by a CPA report. So if you have a CPA coming in and doing what's called attestation services, such as a CPA audit, then you have an applicable financial statement. And that limit for that our safe harbor is $5,000 instead of $2,100. Finally, an AFS also includes financial statements required to be provided by the federal government or state government agencies other than the IRS and SEC. So sometimes, let's say you're a nonprofit or you have some type of activity that is required to be reporting to a federal or state government agency, then you by default have an AFS. But again, majority of people are not businesses with an AFS. To make this safe harbor election, so to be able to just deduct those expenses immediately, you're looking at a sample. Just attach it to your tax return. You have to do that on a year-to-year basis. You can see the code section that you're referring to. But this right here is that sample tax election. Who's it going to make sense for? Our real estate investor federal tax selection chart, the de minimis safe harbor election, for anyone that is a rep status on a long-term rental property or material participant on a short-term rental or rep status on a long-term rental, it's going to make sense for you. Otherwise, possibly it would make sense for you. It's going to make sense for you if you have taxable income and you want to take those deductions immediately. The only drawback would be from a bankability standpoint, we have additional content on that when you see this deduction on your tax return, it's going to look like repairs and maintenance. So typically banks are not going to add that back to your bankability. So that's why I put in there possibly on some of these AIM matrices. Calls to action. Take a look at your return. Determine if you fall into an AIM matrix that would benefit from that safe harbor election. Determine if you have an AFS or not. Most people will not have that applicable financial statement. And if you're eligible, consider making this de minimis safe harbor election. We already gave you the sample election, and that's on a year-to-year basis. If you don't make the election, you're going to be forced to capitalize a lot of those expenditures, and you will not see that immediate deduction. All right, thanks for watching.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself. Everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.